So the big question is this: how do most agents who struggle to get the information that most successful agents hoard to themselves grow and prosper without this information? That's the big question, and this video cast is the answer. Welcome to Real Estate Rockstars. I'm your host, Pat Hyben. All right, Rockstar Nation, we have a super special guest today. I got Lane Kawaoka on the line, come from Honolulu, Hawaii. And Lane has this cool podcast that I went on because, as you know, I'm a big investor on a lot of single-family homes and apartment buildings myself. And, I was talking to Lane, and we were talking about how such a segment of the real estate market today is investors. Such a segment is investors. There's so many investors out there. I had somebody come on the show recently and tell me, Pat, do you know what the bigger sucker theory is? And I was like, yeah, the bigger sucker theory is, there's always a bigger sucker, meaning that you could always sell something in a good real estate market or any sort of market if you find a bigger sucker. And that's essentially what Lane did. He found that he was buying things in 2009, 2010, and the market was appreciating so much that the cash flow sucked. So he found somebody else who still thought they were getting a great deal. He felt he was selling at the peak. They felt they were buying at the bottom, and then he was able to go into markets and buy where he may or may not be the bigger sucker buying at the bottom, but someone was selling and willing to sell and wanting to sell. So anyways, I thought when I was talking to Lane, when I was talking to Lane, I said, real estate agents need to know how to work with investors. They need to know what to say to investors, how not to turn them off, how to speak their language, what they're looking for, and how to attract them and how to keep them. And who not better to teach them that than an investor himself, someone who buys single-family residences and someone who buys them without even living in the area here. He used to live in Seattle. Now he lives in Hawaii. He's buying stuff all over the country, and he's renting it out. And so I said, why don't you come on the show and teach the Rockstar Nation a little bit about investing and what you look for and how to be a good real estate agent with investors. So anyways, without further ado, Mr. Lane, welcome to Real Estate Rockstars.
Hey, Pat. How's it going?
Good, buddy. Why don't you give everybody a little rundown other than what I already said on yourself so they can kind of get to know you.
Yeah, and I congratulate all you guys out there for not falling into the greater fool's theory. That's what I call that one.
Greater fool.
There's always another fool wanting to buy it for more. But I focus on cash flow. At simplepassivecashflow.com. I've got a podcast and blog out there, but I've been working with clients lately to try and hook them up with single-family home rentals, get them started. So my background is I started with single-family homes in Seattle, and then I realized that it was appreciation-based, which is great when it happens, but cash flow is for sure it's going to happen, and you can underwrite it even in a correction. And we're kind of on top of the market, I think, 7th, 8th, 9th inning. Nobody knows, but it's definitely a lot better than what it used to go for. So a lot of the properties I initially bought were turnkey rentals when I started doing my out-of-state exploration. Now I have a dozen properties in Birmingham, Atlanta, Indianapolis. These are the B-class $100,000 properties that rent for $1,000. The 1% ratio is something that the investors like to look for. And a lot of times you go through a turnkey provider, and what these are guys doing like about 100 properties every year. They're high volume. They do a good job. They create a property very with the good layouts, the right floors, no carpets in the living area, and out-of-state investors were able to pick up this stuff pretty good, and these turnkey providers were playing the middleman, and also paying out a lot of referral fees to a lot of agents at the time, and also going to different marketers, guys with different podcasts you hear out there. A lot of them are just to find investors like myself on the West Coast, East Coast, or Hawaii with a lot of money and not really access to properties with good rent to value ratios. So that's what I've been kind of doing lately with my simplepassivecashflow.com. I have been building a list of accredited and non-accredited investors looking to get started in real estate. But like you said, Pat, it's a seller's market out there, right? Like I mean, what are your thoughts on where we are in the market?
Yeah, I mean, you said a lot of stuff. I mean, I'm gonna get into some of that, and we'll get into the seller's market too, because it's definitely an interesting thing. And I think most people that comment on seller's market versus buyer's market have a conflict of interest, anyways, because they they're in the game in one way, shape, or form. They have an angle to their answer. But let's first of all talk about your story. You were in Seattle, Washington, right? You own places in Seattle. You own 2 places in Seattle, right?
Right.
What were they?
They are A-class rentals.
And explain what an A-class rental is.
Yeah, so rental properties are split out in A, B, C, D class. Okay. So A-class is probably where you and I live, Pat. Like, this is pretty nice stuff, right? I mean, it's for white-collar working.
Here's a go, right? Stuff that you would live in yourself.
Right.
Yeah, right.
A lot of ways you can cut and slice this stuff. You can say it's people with higher credit score, higher net worth, white-collar, people, places where, women and dogs can go out running at night. It's
there you go. I like that one. Where women and dogs can go running at night. Probably where you have a lot of owners, right? Like, and you move in. If you move into an A-class renter, people might assume that you bought it.
Right. And there's also some discussion on how you can grade the building. The building can be an A, B, C, D class, or the tenant can be an A, B, C, D tenant. But for the most part, from a 20,000 foot view, you usually, just starting out, you say that you first specify your criteria as an A, B, or C class tenant.
So you had these A classes in Seattle, and they weren't giving any smart returns. They weren't smart passive investments for you. So give me an example. Like how much were they worth, and what were they paying?
Yeah, so the first one was worth $350,000, and the rents that it brought in were $2,200. So the quick and dirty way of doing this is what we call the rent to value ratio. So you take how much the monthly rent is divided by the market price. So 2,200 divided by 350,000. So I can't do the math, but I know that's about 0.5%.
Yeah. Well, 4,400 would be 0.5%. So, it's going to be, 0.65 or something, I mean, it's something like that. So,
right.
And you want 1% or better, right?
That's correct. I'd say 0.9%. Anything less than that, you're probably not going to be cash flowing. Of course, there's a lot of factors in there, such as insurance, vacancy in the area, repairs, property management costs.
This is a gross, where the biggest area that people get screwed up on this or hicked up on this is when you have condo fees, because you almost have to subtract the condo fees from the rent. I really think you should net those out, because if your rent is $2,200 and you got 200 condo fees, that's really $2,000 compared to buying a single family house or something without condo fees. Other than that, I think we're just looking at gross monthly rent, guys. That's it, just gross monthly rent. So you went and sold those, and then you ended up with a dozen properties in 3 different states. Tell me how you decided to buy these 12 properties, how real estate agents were involved, and what the Rockstar Nation can learn from your experience in buying these 12 houses.
Yeah, so initially I bought them through something called a turnkey provider. So these guys are high volume flippers and rehabbers. So what they'll do is they'll buy a property, fix it up, and sell it to put a tenant in there and sell it to an investor from the West Coast, East Coast, or someone where they're living in an A-class area, or usually California, Seattle, places like that. And these people like myself want that passive income. They want the mortgage pay down, the appreciation, especially the tax breaks. A lot of the people that they sell to are high income earners with no time to do this on themselves. So this is sort of a way. It's called turnkey investing for a reason. And there's no agent involved in this process a lot of times. But
right. So somebody buys them cheap, fixes them up just like a flipper would, right? Maybe a little fancier than a flipper. Finds a tenant, puts a tenant in, and then says, "Hey, Lane, you want to buy this thing? It meets the 1% rule, and it's nice and shiny, and I can make it real easy on you, and it already has a tenant, so you don't have to, go through the jumping around of that." And you're like, "Yeah, that's cool. I don't even have to fly into Pittsburgh to look at it. I'll buy it." Right?
Right. And there's another way you can buy these things. You can buy it through a marketer, someone who's just a talking head on the podcast. And you guys probably see them out there. They they educate about real estate investing.
Had several on the show.
Right. And they come on and they you buy through them. And of course, they're sort of operating in the facet of a real estate agent. They may not be helping you sign contracts and doing all the legalities, but they're picking up referral fees or however else they get compensated.
Well, okay, so I'm thinking of one in particular that I recently had some interaction with. And what threw me off a little bit is when he said that my commission on it would be $10,000, regardless of what the house sold for. So he said, "Pat, if you send people to me and they buy this house for $110,000 in Dayton, Ohio, I'll give you flat 10 grand. No matter every house they buy, I've built in $10,000." And for me, that felt greedy, almost like that's like too much, And his argument was, "Hey, it's 5% commission roughly or whatever, And I was like, just for giving you a name, I don't. So I just felt like that fat in there shouldn't have been in there, right? And I sort of ran away from it. I didn't want anything to do with it, to be honest with you, because it was just too much. And plus, I didn't have a good feeling. I didn't know that whether these things in a bad market were going to be rentable or I wasn't confident about it. So now looking back, do you recommend these turnkey rentals for people listening, or is your advice shy away from them?
I would say you have to get started somewhere. So whether you're paying a coach $10,000, $20,000 to get started, or picking up a turnkey rental and somebody makes a fat commission, well, that's cool. That's cool for your first, right? But after a while, your second, third one, you should be able to do this on your own. And hey, Pat, I really commend you on that. That's kind of exactly what I thought when I was first bought my couple with these methods. I was like, this is messed up, right? And that's kind of why I just created simplepassivecashflow.com and I made everything for free, because I was kind of pissed, right? Like, these guys, all they did was they just send you a couple emails and then they CC you to the turnkey provider, and then that's it. They're like, "Peace out, bro. Talk to you later. Let me know when you close so I can ping my guy for my referral check."
Well, yeah.
It's messed up.
I want you to think about the word toolbox. What is a toolbox? A toolbox is a box full of tools that you use to build something great. At Real Estate Rockstars, we've created our own free toolbox. So everybody that comes on the show as a guest brings a tool with them, and we plow them all into this toolbox, and we give it away for our viewing audience to basically use as they wish. Everything we put in there is an actionable item that can be downloaded, can be printed, can be used immediately. And we got things like scripts and dialogues, checklists for teams, checklists to keep agents accountable, referral forms that are filled out at settlement to get referrals by your buyers and sellers. Everything you could think of that you could use on a regular basis about real estate is included in this toolbox. And it's helping agents worldwide sell more houses and make their jobs a lot easier and processes much more efficient. And the thing is, It's absolutely free. All you got to do is go to hibandigital.com/toolbox or text the word toolbox to 444-999. That's toolbox 444-999. Do it now. Yeah, it is interesting because even in real estate, you know, like if I refer something to an agent in Seattle, they're going to pay me somewhere between 20 and 30% most likely, right? You generally 25%, but you know, it varies, right? And so I might make $1,000, couple of grand, or whatever, depending on the price of the house or whatever. And that's high for just giving a name, you know, to be honest with you, but it's more of an industry thing. And that may dissipate, obviously, if commissions dissipate. But nonetheless, let's move on from that. So that's iffy. You know, my recommendation, and I've always had this junkyard dog recommendation. You know, I would rather, you know, if you're going to get into real estate, anything you do will be a learning experience, and you have to embrace that learning experience. And don't be a wimp. You know what I mean? Like, you know, I tell people, they're like, oh, I want to get into real estate, but nothing in my hometown meets the 1% rule. And I'm like, well, drive 45 minutes, drive an hour, you know, buy something that scares you a little bit, learn a little bit about construction, learn about repairs, you know, make sure that it cash flows to the 1% rule or better. And the next one, you'll be so much stronger. I really feel like it's almost a disservice when people put money in the things without a lot of effort because it becomes too easy and they don't learn anything. And at the same time, they don't do the due diligence. It's kind of like investing, you know, too much in the stock market. It just sometimes things become too easy when, you know, and that's not a good thing if it's too easy, because it usually backfires on you somehow. But nonetheless, so you bought a bunch of these. Now you're out of that. Now you're buying them on your own. You're working through real estate agents. What can our real estate agent audience learn from you? What first of all, what annoys you most about real estate agents as an investor, and what can we learn from that?
Yeah, so maybe you mentioned that $10,000 check. I just wanted to mention real quick that the reason that they were able to offer that fat commission is what these guys were doing. They were just figuring out what the 1% rent to value ratio was, and then just making the cost up to that. So if they had a property for 900 grand and it rented for $1,000, they knew they had that room in there to bump it up to 100 grand. And you know, all these poor out-of-state investors, these doctors, engineers, lawyers who don't have the time or the knowledge, and they're not being represented with that fiduciary responsibility. You know, we're just buying properties without a real appraisal and real representation, and that's really where that was coming from. But yeah, so I got pissed off. I figured that out pretty quick, and I was like, well, I need somebody to represent me, because I just don't want to buy in the wrong area, wrong block, right? A lot of real estate's block to block, and you know, I want someone to be agnostic to a property. I want them to like, hey man, like, hey, you and me are going to work with each other, and you know, this property over here is no good for you, but I know you and I are going to find one, right? And that's the way it should work. Not this guy. Yeah.
Real estate agents, they have a fiduciary relationship to you, you know, as the buyer agent, to not screw you, right? So you do have a much better protection, even though there's a commission worked into the sale price. You at least have a fiduciary relation. You know, they at least have a fiduciary relationship where they're certain you can sue them if they screw you over. So, you know, the other thing is let the buyer beware. You bought that, and that was your choice. And the guy that referred it and got the $10,000 commission from emailing you, there's no fiduciary relationship. You really can't sue him, right? So how can real estate agents, better serve people like you?
Yeah, so let's kind of go down the list here. You know, we like properties that are sort of on the bare minimals, not the A class like how you mentioned, and not like D or C minus class, which we kind of call war zone properties, where you've got to get a gun to go collect the rent, or tell the property management, in our case, to go get the rent with a gun.
Right.
So we like to stay in that sweet spot. And there's a great book, Millionaire Real Estate Investor by Keller. I'm sure everybody has read the agent book out there, but he's got an investor book, and there's a nice chart in there showing the ACD class, and where does investors like to stay? They like to stay in that about 80% of median price. So a lot of places are 130,000 median single family home. So take 80% of that, and that's kind of the sweet spot, plus or minus 10, 20%. That's your bread and butter. That's your working class. And then either they're working in retail or manufacturing. That's our avatar. That's who investors are looking for. So that's for the after you kind of get into that price range of whether it's $80,000 or $120,000, and you check the rent to value ratios. Now we're just looking at the layout. Some of these layouts are obsolete. We don't like those things, and you guys know about that stuff way better than we do as investors. Floors, as investors, we don't like carpet. Every time you do a tenant turnover, you've got to tear out the carpet and replace it. It's great for a retail buyer, but as investors, we don't like that. We use that LVT flooring. I mean, it looks great. I mean, that thing is God's gift to the world, lately. But in some higher end rentals, maybe A-, B+ rentals, maybe some carpet in the non-high traffic areas, such as the bedrooms. That might be cool. Then we move into amenities such as, garbage disposals. Most of my rental properties don't have garbage disposals, nor do they come with refrigerators or stoves.
What's the logic there?
Well, I mean, it's just another thing to break, right? Just like, 3 toilets. Just another thing to go wrong. The more bare minimals that you can have, the less maintenance costs and CapEx costs you have in the future. And also, when your property goes vacant, a lot of these areas, you can't control what vandals do. I mean, a lot of times they'll just steal the refrigerator or stove or whatever they can get their hands on, even though the property is semi. The grass is cut. You've done what you
do about that, right? You gotta have a stove and a fridge.
Not some of these rentals, these C+, B- rentals. It just comes standard, and it's depends on your area too.
I want you to think about the word toolbox. What is a toolbox? A toolbox is a box full of tools that you use to build something great. At Real Estate Rockstars, we've created our own free toolbox. So everybody that comes on the show as a guest brings a tool with them, and we plow them all into this toolbox, and we give it away for our viewing audience to basically use as they wish. Everything we put in there is an actionable item that can be downloaded, can be printed, can be used immediately. And we got things like scripts and dialogues, checklists for teams, checklists to keep agents accountable, referral forms that are filled out at settlement to get referrals by your buyers and sellers. Everything you could think of that you could use on a regular basis about real estate is included in this toolbox. And it's helping agents worldwide sell more houses and make their jobs a lot easier and processes much more efficient. And the thing is, it's absolutely free. All you got to do is go to hibandigital.com/toolbox or text the word toolbox to 444-999. That's toolbox 444-999. Do it now.
Yeah. A lot of the places in Birmingham.
Okay, so what about like, I'm a real estate agent, right? What do you want from me? How can I help you?
So a lot of this, the investors should be able to have a criteria of what they're looking for.
Okay.
Price range.
So I guess the answer to the question is you ask the real estate agent should ask you, what is your criteria?
Right. One of the biggest pet peeves is I talk to a real estate agent, and sometimes I'm just testing them. I'm just saying, go find me some rental properties, and they bring me back all this junk. Well, not really junk, but like nice properties that are like very homey. And like, I'm not looking for homey here. I'm looking for solid, stable, durable rental stock.
So they should ask you things like, what class property are you looking for? And then again, the A class is something you'd live in them. They would live in themselves, or you would live in. A B class is, and again, you could, if you did it by year, B class would be what, like 10 to 30 years old or so. And then C class over 30 years old. And then a D class is ghetto property, a place you wouldn't go at night. I mean, there's plenty of ways to look at it. You can Google it, and there's all kinds of ways, but just ask them that question, and see what they answer, and then ask them what return are you looking for, and see what they answer. Because at the end of the day, if they don't understand what they're looking for, you're not going to be able to help them, and you're certainly not going to be able to do a job for them that's reputable by giving them something for $4,400 that they rent for $2,200. I mean, unless they tell you point blank that I'm only looking to make, 0.5%. So, right? What else should you be asking them? What else do you want an agent to ask you where you are like, damn, that's a good agent, I want to work with him and buy a house?
Yeah, so some of the commercial brokers, they'll talk in terms of cap rates. And what cap rates is a income minus expenses. And it makes no sense to investors, because how do you as a real estate agent know what the expenses are? I mean, we know what the income is. So how can we talk in terms of cap? I think the first discussion is, what is the projected rents? You as the agent need to go out there and get me rental comps. And I know that you can't get it on the MLS. So you've got to go on Zillow. You've got to go on Craigslist. You've got to go Rent-A-Meter. You've got to look in your own classified ads to pull up comps.
What's Rent-A-Meter?
Rent-A-Meter is another one of those websites that kind of gives you another opinion on how much it should rent for.
So what do you think about these rentals? I don't know. Do you have any rentals that are rented out short-term rent, or is all yours rented out long-term?
All long term. I'm not a big fan of the short term.
Why not?
First reason is, people who get into short term rentals are usually the unsophisticated crowd, the greater fool's theory. I mean, you hear about it everywhere, right? Every mom and pop.
Like Airbnb and VRBO.
Yeah, that's the exact one I'm talking about.
Oh, okay. So you mean the investors that get into it are unsophisticated?
Right. It's people who stumbled upon this property, and they figure out that, wow, look at the spread between the rents and how much the mortgage would be. But like any unsophisticated investor, they don't take into account the big picture. So the expenses on those things are huge. And then the pain in the butt to go out and clean the property if you're doing it yourself. Yeah.
So the expenses are cleaning, maintenance, right? Because it's getting a lot of wear and tear. Of course, licensing fees. Is there anything else I'm missing? The additional expenses on something like that? The management fees, where, a management fee for, a long-term rental might be between 5 and 10%. On those things, they're up to 25%, right? Like I got a buddy in Florida that owns a bunch, and he pays 25%.
Right. I mean, on a single family home rental, long-term rental, you're probably looking to take home about 60 to 50% of the income. So if you make $12,000 a year, you're probably only going to take home $6,000, and then you got to pay your mortgage. This is on a
short-term deal or a long-term?
Long-term deal.
I mean, and you've got a crap load of expense there, which is smart, right? And this is without a mortgage, right? So. That's probably conservative, but hey, I'd rather you be conservative. I mean, the thing that I find with my rentals is inevitably every year there's an expense that I didn't expect, a new air conditioner or new septic system. And I think that's what screws people out of the game. So I'd rather be conservative like you are. What about on a short-term rental? What do you expect? What percent?
I mean, it's more like a business. You're talking about 80% at least of expenses. So if you're bringing it, I mean, of course, the income is a lot higher, a lot more substantial, but a lot more expenses. So cook that into your numbers, and the the headaches, right? I mean, that's not simple or passive. It's a business.
Now, are you including a mortgage payment at 80%? Because that seems excessive.
Yeah, the mortgage is after that. So you've got to have enough money to pay out the mortgage after.
Yeah. In a lot of markets, it doesn't work. Like I live in Folly Beach, South Carolina, and what you would have to pay for a house, even with Airbnb, which is, crazy, like $250 a night for a little house. The numbers don't work at all. The return doesn't work at all. What is very interesting that I don't think people are paying attention to when they're investing in these short-term rentals is government, right? Like I know the city of Charleston, South Carolina, is revamping how they regulate these things. And they've always had regulations, but what they haven't had is an efficient way to enforce them, right? Like they're like, oh, somebody turned somebody in. They're like, oh, there's a new person in that house every week. They're Airbnb-ing it. It's against the, they're not allowed to do that within certain city limits, within a certain distance, the historic district, there's all these things, right? And they get turned in, but there's no way to enforce it. They don't have like a rental cop to go over there, knock on the door, or somehow figure out how to prove it by taking a snapshot of a Craigslist ad or an Airbnb ad. They just don't have time to enforce it. So what they're trying to do now is fund money to create enforcement of it. But my point is that let's say that the funding does go through and they start enforcing this in places like Charleston, places like Nashville, which is going crazy for bachelorette and bachelor parties using Airbnb, and people are buying houses there. And I've had them on the show here for, $300,000 and they're making $12,000 a year, which is phenomenal returns on these houses. But what they don't realize is it could all change overnight with the proper enforcement and with a different set of rules that are enforced properly.
All right. Yeah. And here in Hawaii, I mean, the hotel industry it's a tourism state. So the hotels here, I mean, they govern this stuff like crazy. And like you said, at any point, this stuff can go lights out on you. And now you're stuck with this property that can't even operate as a long-term rental. And you're going to be bleeding money every month.
Yeah. And you got furniture in it, right?
Right.
So you probably have like a damn flat screen TV in every room, and you've got all this nice stuff in it. And then a family of 4 or 6 are going to move in. They'll be like, we have our own furniture, we don't need a TV in every room. I mean, all that stuff's wasted. I mean, you're going to have to put it in a storage bin. So there is some major inherent risk. And I think that's why I haven't seen yet, and maybe it's out there, maybe you know about it, somebody taking an entire apartment complex and just going, short-term rental on the whole thing.
I've actually seen that in Las Vegas. I mean,
you did.
I saw these rental properties right behind the Stratosphere.
Tell me about this.
And I'm looking at the rent rolls, and I'm pulling up the CoStar report, and I'm like, whoa, these are phenomenal rents.
Cash
What's going
cows,
on here?
right?
Yeah, I'm like, okay, well, come to find out they're weekly rentals, and only in Las Vegas, right? But the bad thing is, like, these are taxed differently than your traditional rentals, and then it's just another way that they get you, right? Like, these are the things that unsophisticated investors don't look at. They don't look at the big picture. They don't
that's another thing
accurately.
they can do. Like here in Folly Beach, it's an 8% hospitality, 18% hospitality tax. And one of my neighbors does Airbnb, and I was talking about it. He's like, yeah, I pay it. He said, I didn't used to, but now I pay it. Well, guess what? That can be changed too. You can turn around tomorrow, and especially in a little town like Folly Beach, and the city council jacks that thing up to 30%. Or right people get in office and they say, hey, you got to go a week or more, or you got to go, a month or more, or 90 days or more. I mean, you just never know.
Right. And also you got to accurately predict your vacancy, and those vacancy swings are huge. But I think at the end, you just got to do your own research, There's a good website out there, AirDNA.
Air DNA. Tell me about that.
Gives you a bunch of the gives a lot of brings together a lot of the data on how much these rentals are going for each night, and it gives you all these cool graphs. It's a pretty awesome website. But yeah, just do the numbers yourself. And
I mean, I would consider buying a couple of things. I would consider buying one if, number one, you think you could flip it to a long term and still make the 1% rule, right? And number two, I didn't take all my money and plow it in there. You know, I had one of 20 properties or 3 of 20 properties were Airbnb. You know what I mean? So my whole life's net worth wouldn't be in there. I wouldn't go full out into it and push all the chips in the middle of the table.
All right. For me, it's not scalable. I mean, my mentor told me if you can't scale it to 8-figure business, don't do it.
Yeah. Well, listen, Lane, this has been awesome, buddy. I really appreciate you coming on. There's always fun stuff to talk about. One of the things we do is all of our guests contribute to a toolbox that we've created where everyone chips in and throws something in the toolbox that our listeners can listen to and pick up. And I'm going to put your contribution, which is, what are you going to be able to offer us today?
Yeah, so I'm putting in my analysis spreadsheets, buy and hold spreadsheets into a Google Drive, and you guys can come to Simple Passive Cash Flow and download them there. And I'm coming out with a How to Buy a Turnkey Rental book. So I know a lot of real estate agents. You guys need to get in the game too. I mean, you guys know this stuff pretty well, but a lot of 1% of agents invest, and it's pretty needs to go higher. And also, I asked of your agents out there, if you guys want to work with some accredited and unaccredited investors, give me a call, give me an email. We're for some good agents to help procure real estate investment properties, so we don't have to work with these turnkey providers.
Got it. Awesome. Well, listen, Lane, I'm going to put everything we talked about on hibandigital.com/Lane K. I'm going to make it easy for you guys. He has one of those Hawaiian names. I'm going to be hibandigital/LANEK, or you could go to the toolbox at hibandigital.com/toolbox to pull up his buy and hold spreadsheet to help you analyze the buy and hold analyzer, or text toolbox to 444-999. Lane, listen, you've been awesome, brother. Oh, by the way, I'm going to also put all Lane's information in the show notes, as we always do. Best of luck to you. If I'm ever in Honolulu, Hawaii, I will look you up and we will break some bread, my friend.
All right.
Thank you for watching Real Estate Rockstars. Please give us a review wherever you're watching or wherever you're listening. We eat feedback for breakfast, and I don't care whether you give me a 1-star review or a 5-star review. I just want the review. I want to know what we're doing right and what we're doing wrong. Would love to improve things. Hey, and listen, please subscribe. The more subscribers we get and the more reviews we get, the better guests we'll get for you in the future. Feel free to reach out to me anywhere on social media. Just type in my name. I'm everywhere, and I look forward to meeting you in the digital world. Have a great day, and thanks again for listening to Real Estate Rockstars.